Hi, let's talk about Nuvve Holding. It's a company that develops wheel-to-grid software technology, and the company's grid integrated vehicle platform, so GIV, transforms electric vehicles into grid assets when charging, and uses electrical vehicles to store and resell energy to the electric grid. And the company was founded in 1996, and it has headquarters in San Diego, California. The following information should not consider as investment advice. The simple Wall Street rewarding pretty much the stock very well. It's trading almost 20% below the site's estimated valuation. Revenue is forecasted to grow over 65% hugely. Revenue grew by 47.4% over the past year. But as we investors like to calculate some of the risks for volatility, and it has volatile share price, and unfortunately currently it's unprofitable and not forecasted to become profitable over the next 3 years. And this is a serious situation. Negative shareholder equity, and has less than 1 year of cash runaway. And there's two more risks, I think, about the capitalization. Based on simple Wall Street, it's not finding it meaningful, and also the revenue that they are gaining, 3 million, is not meaningful as well for simple Wall Street. The latest share price and some of the product updates made the stock pretty much went up since the last updates. And there was so Nuvve acquisition company shares are trading higher by 50% on Monday afternoon after the company announced an agreement with Evolve and Stone Peak to pursue 750 million joint venture to be called Levo. That made stock price went in a moment like 50%, but it gets down to currently 42%. And also there's volumes are getting high as well. On the market performance, so they have been on the market not so long time ago. We see here 30 days return only -9, 7-day return -17. Unfortunately this is highly volatile since it's made some of the ups and downs, but currently it's from the ups like -50%. And many companies had their own peak in January or in mid-February, but this is returning, and I think it has pretty good possibilities in long term. And the price is almost the same as they entered the index or the IPO. And long-term price volatility, since the share is not in relative to the market within 5 years, it shows low, but the industry is lower than the average market volatility. Anyway, this 7 days -17%, it's a hit for investors, but keep investing or try to see the ideas on much earlier stages, and try to not invest over 1% from your portfolio. Valuation side, so fair valuation of the stock price should be based on simple Wall Street 10.14, and we see here also on tip ranks some of the stock forecast and price targets. Currently it's $19 per share, 60% upside. Similar numbers are here in Market Watch, so $19. It has, like I said, huge potential to reach those same number that we saw in January or even in December. So it opened up 14 and got highest point of 22 and closed by 22.27. And yeah, future growth, it's forecasted that annual earning growth would be 36%, very good. It has potential. Earnings per share growth is forecasted, by the way, to profitable side within 2 years. So there is possibilities that they're gonna make to the profitable by the end of 2023. Past performance, last year earning growth increased by 15%, and yeah, unfortunately it's currently unprofitable. Financial health side, yeah, this is serious situation since the equity level is decreasing and depth level is increasing, and also there's also cash level of cash is also decreasing. And this situation is from last year's 30th of September, so we don't have quite fresh data here. Balance sheet, yeah, looks pretty red, half of the red, and be aware that there's negative shareholder equity, which is more serious situation than a high level of depth. Anyway, let's continue to the ownership. Yeah, no volumes, by the way, and ownership breakdown: general public holding 65%, institutions 14%, hedge funds 10%. Top shareholders, yeah, so we don't see here fresh data neither, and I don't see here, for example, BlackRock or Vanguard. Worth Venture Partners 10% owning. Anyway, the simple safe dividends shows that shares outstanding pretty much on the same level, and total sales are increasing, which is very good. So this is a better situation where shares outstanding keep pretty much on the same level and total sales are increasing. And as I said, it could be volatile, but it has good potential to reach those peak numbers that we saw in February or December. Anyway, investing.com, summary the stock for long-term investors as a sell. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.